Welcome back, investors, to Ticker Time News. I'm Adam, and thank you for joining me for the After Hour show. We've got a bunch to talk about like we do every day, but remember, the most important thing is what's on your mind. So if you have a question, leave the ticker symbol and your question in the comments, and we will go over it live during the show. So thank you again for joining me. We've got a bunch to talk about. Some earnings came out that are important to look at. A couple companies I want to dive a little deeper into, and of course talk about the market. So I'll do my opening monologue, and then we can dive into either the stocks that I have picked out for today or whatever's on your mind. So make sure to leave the ticker symbol and your question in the comments, and we will go over it. So without any other plugging, well, I want to make one other thing, put one other thing out there. On Sundays, we have our Catalyst watch video come out. It's an important video to watch because it gives you a heads up on what's to come during that week. So watch for that video to come out on Sunday, and it'll help you to prepare for the week. It's stocks that are set to move, whether that's up or even down in some cases. So watch for that on Sunday afternoon. Okay, now that I'm done plugging that, let's get into it. So Wall Street's main indexes, they lost some ground during today's session after hitting new intraday record highs as healthcare and technology shares kind of weighed down on the market. Stocks, or still, the indexes were on track to close at fresh record highs after payroll report surprised on the upside. The U.S. economy added 531,000 jobs in October, more than expected. The jobless rate fell below a new pandemic low of 4.6%, while wage pressures remained under control. On the corporate front, Palantir is an important one that's coming up, though. But Peloton, we talked about this late in the show yesterday. But I can't get them. Oh, the nerves of having a live stream. I still get them. Even though this is our 25th episode, I still get nerves, especially in the opening. But Peloton shares fell more than 30% after the company issued disappointing quarterly forecast and full-year guidance. And we did talk about that yesterday, because if we link that to Planet Fitness, which is a gym, and they sell like a subscription-based model, they sell memberships, they actually did really, really well. And that is the quite opposite of what Peloton is doing. So Peloton had very bad report, very bad guidance, and the stock fell hard. All right. Pfizer did share, their shares traded higher today after the company said its COVID-19 pill reduced hospitalizations and deaths in high-risk patients by 89%. Anything that can reduce death is a great thing, no matter what category it falls under. On the week, all three main averages are on track to book strong gains. The Dow is up about 1.3% on the week. The S&P 500 is 2% higher, and the NASDAQ is 3.3% to the upside for the week. Also, gold prices reclaimed that $1,800 an ounce level to post its highest settlement in 2 months. And right now, gold is up 1.42% today. It's at $1,817 an ounce. So we've been watching that all week slowly tick up, and it's up there. Okay, you can look at certain ETFs if you want to trade on the rising gold prices. You have ETFs like GLD. And here, let me just throw it up on the chart here so you can see. Remember, if you have questions, just leave the ticker symbol and question in the comments, and we will go over it during the show. All right, so let's look at that first gold ETF. GLD is the ticker symbol. Let that load there. And that's the Spyder Gold Trust. And you can see it's been bouncing around quite a bit this year. This is a daily chart, so each candle represents one day. But since this bottom right here on September 29th, gold has been slowly creeping back up, and you can see it in this ETF. It stayed right above its 200-day moving average today, which is a very bullish signal to reclaim that space. You can also look at GDX. That's the ticker symbol, GDX. And GDX is the Van Erik Gold Miners ETF. Now, you can trade these ETFs, whether it's swing trading or just straight up investing in an ETF to get a basket of companies here. But also on this one, since September 29th, that was the bottom. And then it rallied until it hit its 200-day moving average on October the 22nd. And it kind of pulled back a bit. It bounced around its 50-day moving average, and also this price line channel here that kept it up as well. But it is rising. It's back up. It's going to be interesting to see what happens when it gets back to its 200-day moving average. This ETF is a little weaker than the GLD ETF because that one is trading above its 200-day moving average. And one other ETF that you can look at is Ring, RING. And that's the iShares Global Gold Miners ETF. And we'll see a similar pattern once this loads. It also had that low right here on September 29th, had a nice rally throughout October. It hit its 200-day moving average, and that was resistance. And that again followed the exact same path as GDX. It pulled back to its 50-day moving average and has bounced off of that. So this one too, it'll be interesting to see what happens when it gets back to that 200-day moving average. Now, if you want to look at gold mining shares, you can look at the ticker symbol GOLD, GOLD, and let that load there. Okay, so this is tracking gold exactly, one for one. Let it load here for a second. Okay, so there was a low right here, again, September 29th. They all seem to follow a very similar pattern. It rallied throughout October. It has pulled above its 200-day moving average today with a nice 1.4% gain, but it is running into some trend line resistance right here. And if I go out to look at the fuller picture of this, you can see the downtrend that it's been in all year, but it kind of hit a turnaround spot with a double bottom right on its trend line and price line support in the month of March. It had a rally through April, through May, and then it pulled back, and it's been trading sideways ever since, but it is in a rally now, and it is above that 200-day moving average, which is a very bullish sign. All right, this week, the best performing sectors were consumer discretionaries. They were up 6.19%. Services, they were up 4.65%. And basic materials were up 4.41%. Now, those were the sectors leading this week. The worst performing sectors this week, number one, financials, but they were still up 0.12%, followed by utilities, which was up 0.46%. And then healthcare was number three, and it was up 0.54%. All right, so that was the best and worst performing sectors of the week. Let's go look at some earnings that we had. First up is DraftKings. Let's pull them up here. Ticker symbol DKNG. And we'll see what's happening here. They were down 2.3% today. They're up 1/3% in after hours. and they've been pretty choppy all year long. But there is this kind of price action channel that they have been in here with a low right around $42, with a high, a resistance here of about $53. It's a really good stock to swing trade. You can always find swing trade setups in stocks that are moving up and down like this. We talked a lot about swing trading in yesterday's episode. But DraftKings, their Q3 21 earnings, they had an EPS at a loss of $1.35, which missed expectations by 29 cents, and revenue of $213 million, which was a 60.2% year-over-year gain, but that missed estimates by 24.9 million, and that brought the stock down today right to this support right here. And let me zoom in a little closer here. You can see this blue line. It might be hard to see, but there's a blue line going straight across here. It's right at $42.45, and you can see that candle rested perfectly on that support line there. So I could see the stock kind of bouncing off of this line or trading sideways on this line as we get into next week. Okay, Coinbase, their earnings are coming up. I will be talking about them in our Catalyst Watch video that drops on Sunday. Okay, some companies that made some big moves today. Number one is Alphabet. You got ticker symbol GOOG or GOOGL. Now, Alphabet, which is the parent company of Google, they made a major move and hit a major milestone today. They got to an all-time high of $3,011.41. This is the first time Alphabet has crossed over the $3,000 per share, and it set their market cap at over $2 trillion. Now that they have pulled back some from that $3,000 area, their market cap is at $1.978 trillion. So they got to that $2 trillion club with Apple and Microsoft, but they had to pull back here later in the day. So great milestone for Google. Anyone who's been holding that stock, this is a pillar stock. This is a stock that everybody should have in their portfolio. It's that important. And if you look at this, the stock has been performing incredible. It almost looks like the S&P 500's track, where it has used its 50-day moving average as support all the way up. And then we had that buy the dip opportunity in the beginning of October as it pulled back throughout the month of September, and it has rallied ever since. So really nice. It's really healthy. That's above its 50-day moving average now. A little concerning that it's made a new all-time high, but because it's really close to that $2 trillion market cap, I bet a bunch of investors want to get back to that so Google can wear that crown of having a $2 trillion market cap. So watch this one next week for more kind of swings as it moves up. All right, excuse me one quick second. Sorry about that. Okay, let's go to Expedia. Now, their ticker symbol is EXPE. Now, Expedia is for discount traveling. They're up 15.6% just today on spectacular earnings. People are starting to travel, and that's why this stock is up, and that's why earnings were so good. Now, this one was bouncing off of its 200-day moving average in July. It fell below that in August, which was a very bearish sign, And that was as COVID was starting to be talked about again. Maybe we're going to have another run at it. Maybe we're not. We have different variants of COVID. They all participated in pulling this stock down, but it has since risen back above that 200-day moving average, and you can see it bounced off of that as support leading into earnings, which was a very bullish sign for the company. Now it's just gone skyrocketed up. It's the best performer in its sector today. And it, of course, you can see it has rallied above its 50-day and 200-day moving average. And let's just throw in the other 21-day moving average. It is above that as well. Now, it is moving towards its record high that it set back in March of $187.93. I can totally see this stock getting there and potentially reaching a new all-time high. The company, like I said, it had beat Q3 expectations in its report yesterday. Now, Booking Holdings, ticker symbol BKNG, it's a similar company. It offers discount traveling. And you can almost see a very similar pattern to how this stock has moved as well. It was up 7.4%. It's been rallying since breaking above this 200-day moving average. That would have been a great buying signal for the stock. Now, they have rallied to a fresh high in sympathy. I can't get the word right. Anyways, with Expedia. So their new all-time high now is $26.31 and 68 cents. So good job reaching that new all-time high for anyone holding Booking Holdings. Okay, another one is Mgm Resorts, ticker symbol MGM. So let that load in there on the chart. Now, MGM hit its best level since mid-2008. Yes, it's been that many years in the making for MGM Resorts, but they were up 6.2% today, and they've really been rallying all year. They hit a snag right through here in the middle of the chart in the July timeframe, and again, that was mainly due to COVID fears and the Delta variant pushing the stock down, thinking people aren't going to get back out into the world as quickly as maybe people thought they would. But people did, and it's great that people got back to some kind of normalcy, and that helped the stock rally. It broke above its 50-day moving average in the middle of September, and the stock has just been on a tear ever since. So, yeah, they've been doing great. So another one is Marriott, also been doing kind of well. If we look here, their ticker symbol is MAR for Marriott, and it's a hotel chain. It's kind of seen a theme here with travel stocks, right? Yeah, so Marriott, they were up 2.1% today, and you can see almost a very similar pattern. Once breaking above its combined here, 200-day moving average and 50-day moving average, it's been using its 21-day moving average as support as it's been making this nice rally. And if you want to measure it to give some context on what this is like, if we go to the bottom right here, and go to where the stock is sitting at right now, that's a 31% gain over about a 76-day period. Right there you go. August through November, a 31% gain. Now, they got a fresh record high after narrowing its gain. So that new high was $171.68. Another runner, Nike, ticker symbol NKE. Get that on there for you. Nike has been rising for the fourth consecutive day, and it hit a fresh record high again today. That's not the first record it's made in the past couple of days, but they were up 1.2% to end the day. Their new record high is $179.10. They've been making a very nice V-shaped recovery, bounce off of its 200-day moving average. That is beautiful. And they've been rallying ever since the end of September, all of October, and November so far. Really nice run. And if you want to measure that to see what this bounce has been like off the 200-day moving average to where it is right now, that is a 23.5% gain over a 36-day period. So looking really good. All right, let's shift our gears here and let's go to Bitcoin. Ticker symbol BTC USD on the chart. I use TradingView for all of the charting. There's a link in the description below. They have a free account that you can use so you can trade or start using technical analysis in your trades. But you can see here, Bitcoin is right here. It is in a symmetrical triangle. Now, this symmetrical triangle, it is creating, when you have a garden hose and water's coming out of it full all the way on, and you kink the hose, you twist the hose to stop the water from coming through. Well, the hose starts to build up pressure, right? And when you release the hose, a big burst of water comes out, and then it starts flowing again. Bitcoin is in that position right now. The hose is kinked and the pressure is building. That's what happens in symmetrical triangles. The price starts out moving in big swings, but then the price action starts to tighten. And if you look today, Bitcoin is only down 1/3% on the entire day. So Bitcoin has hardly moved in price today. That's it, okay? That pressure, that tightening of price, Bitcoin is reaching a nexus point here where it is going to blast off. That's what we're waiting for. That's what we're looking for. That's what the setup is telling us, that Bitcoin is about to break loose and take off. Now, talking about Bitcoin, I don't know how many of you are familiar with Plan B, but he is a very brilliant person. He created the stock to flow model for Bitcoin, and he has a poll on his Twitter account. And it says, do you think Bitcoin will reach 500,000, 288,000, the stock to flow times time, stock to flow with time model, 100,000, which is the stock to flow model, or will Bitcoin stay below 100,000 by Christmas 2021? Now, 219,117 people have voted so far. What should I click on? 500,000? Will Bitcoin get to 500,000 by the end of 2021? 288,000? 100,000? Or will it stay below 100,000? Now, for me personally, I have a price target of $75,000 for Bitcoin by the end of the year. But there's a lot of people who say $100,000 is reachable for Bitcoin. All right, I see a bunch of 100,000s. I'm going to click on $100,000, and then we'll see what the percentage is of this 250,000 votes. Here we go. So 39.1% say $100,000 by the end of the year, followed up by 33% say 288,000 by the end of the year. Then 23% say Bitcoin stays below 100,000, and then 4.8% say it will get to $500,000. That is crazy. To me, that is crazy. I wanted to wait, but got some BTC and ETH this week. Good. I'm glad you did. I'm glad you picked it up. Ether hit a new all-time high this week. It is just on a roll. There's nothing stopping Ethereum from continuing to move. And Bitcoin, it is in a very tight, pressurized system where it's about to take off. But here we go. The majority of people, nearly 40%, say Bitcoin will reach $100,000 by the end of the year. I can see it happening. I'm being a little conservative, I guess, with 75,000. But yeah, okay. So I wanted to point that out to everyone. I hope you, it looks like a lot of you are going for the 100,000 as well. So that's good, really good. Okay, moving on from Bitcoin here, I wanted to touch on two EV companies. One, I wanted to touch on Lucid Group, and then two, I wanted to touch on Workhorse for just a moment. Now, one is positive news, one is negative news. Lucid, ticker symbol LCID, they have been performing very well. Up 12.6% today after they had a pullback the past couple of days. But look at this, man. Oh my goodness. If we measure this, and we did measure this a while ago, from the breakout point of the symmetrical triangle here, and this is the same symmetrical triangle that Bitcoin was in. So we could probably correlate this to Bitcoin's chart. But once Bitcoin breaks out, I mean, Bitcoin is off to the races as well. So if we go to where it is at right now, that is a 67% gain. Let me try to do that again without getting that tool in the way. I want to measure this breakout. No, it's not working for me. Let's try this one more time. Okay, it's going to be a little off, so I have to go a little bit above. But if we measure from that breakout, okay, to where it is right now, we're at 65%, add a couple of percentage points to that, and that's only a 14-day period. This is exactly the type of move that we could see Bitcoin hit because of this symmetrical triangle right here. And you can see after it broke out of this symmetrical triangle, it just shot to the moon. I'm not saying that Bitcoin will repeat or copy this exact move, but this is something similar that I could see with Bitcoin for the rest of the year. Once it breaks out of that symmetrical triangle and then it pushes through $67,000 to reach that new all-time high, there's nothing on top of it to hold it back. All right, a couple comments here. I sold around 38. Do you think Lucid has more gas in the tank? At this point in time, no. If Lucid were to pull back, yes. So let me measure this. Where Lucid's at right now, let's call it $42. It's almost there, 20 cents away. Oh, it is. I'm sorry. After hours, it's at $42.05. I don't know if it can go much higher than that. And the reason I say that is right now, these price movements in Lucid, I mean, after it reached this right here, this $40 point, and it pulled back, I thought it would stay down here for a little while longer because it's not trading off of fundamentals. It's trading off of momentum. And I thought once it fell down from that $40 mark, I thought it lost its momentum. Volume came down and the stock was severely overbought. I mean, it was up to 85 points. And remember, 70 and above on RSI is oversold. I'm sorry, overbought. So I thought it was going to come back down. RSI dipped to a low of 80, which is 10 points higher than overbought. but it didn't. It came down and bounced right back up. So it's not trading on any type of fundamentals right now. If I go into a 1 hour look at this thing, you can see it's way above its 21-day moving average. And historically, let's go back to this last run right here. I won't go to the tip of the candle's wick. I'll just go to the top of the candle and then measure straight down. Oh, I got the wrong thing. I need the ruler, not the trend line. Okay, top of the candle, not wick, measure straight down to its 21-day moving average, and there, that was 22% above its 21-day moving average. That's not sustainable for a stock. It had this pullback here. Now, if I'm to measure right here at the top of the candle, and I come straight down to its 21-day moving average, that's about a 9% difference right there. So whenever a stock is that far above its 21-day moving average, something is going to happen to pull it back down to at least come close to it. And in Lucid's part, it dipped below it, but there was really strong support right here for another rally for Lucid at around $33, $32. So if Lucid were to pull back, let's just say it's up here, $41. For me to get into Lucid again, it would have to come back down to its 50-day moving average before I would even think about getting in. And that's a 12.9% from where it's at right now. And it gained 12.6% during normal hours today. So it would have to have a pullback of that magnitude before I would think about getting in, because I don't want to be left at the top holding the bag. It's very possible that Lucid could come down. I mean, it's 10 days away from earnings. We have no idea what is going to be reported yet for their earnings report. They could come in and say, yeah, we delivered the vehicles, but we're not going to manufacture as many as we think, right? That would be something to pull the stock back down. And I don't want to be left at these highs holding the bag if they're going to say something like that on their earnings call, because the stock would drop pretty quick. So it's not moving on fundamentals. It's moving on emotion and momentum. I mean, even look at this. All right, this is the 1 hour chart. It has everything that we saw in the daily chart. But if we look at volume here, and that's going to tell us something. If we go to the bottom of the rally, the last rally it had after the pullback, this is where volume was. And if I just draw a straight line to where volume is right now, that line, it's moving down. Ever so slightly, it's moving down. So what you have right now with green volume and red volume as high as each other, you have people who are trading this all the way to the top of this rally, and it's FOMO, fear of missing out. That's what's driving the stock up. Nothing fundamental. There's no chart pattern. There's no company fundamental that's moving it. It's all momentum, FOMO, and that's what's happening. Now, I love the company. I've invested in the company before. I've sold out of it. I don't have any position in Lucid right now. And for me personally, I wouldn't buy in at 41.85. So it's even coming down in after hours right now. It's just dipped and now it's flat. Okay, so that's my thoughts on Lucid Motors. Let's see here. Love the company. I'll wait for it to return to $30. That would be a safe bet. And right now, there is price support right here at $30.70. And that goes all the way back to the last rally that Lucid had, way back, way back. We would have to go all the way back here. And what is this? This is February of 21. There was support around that $30 level before it made that hyperbolic move. And then, I mean, look at all the beautiful trade setups that there were this year for Lucid. I mean, 3 symmetrical triangles, all 3 of them led to beautiful rallies. One just above my head here, a nice rally. Second one, and if you bought the dip when it broke out of the symmetrical triangle, you had even a better rally. And then the third symmetrical triangle, and then a third rally. But right now, I needed to come back down before I would buy in. But it's been a beautiful stock to trade all year long. All right. There's a question here about SHIB. Let me pull that up. I know it's been running here lately. So the ticker symbol to look at it is SHIB USD. And I'm going to use Coinbase's data. It's at 64.10 right now. It had this, obviously it hasn't been here moving long. All right, here we go. All right, slow down. Okay, so you can see that beautiful rally that this thing had, and then it swung around, had this nice pullback, and it's been rallying ever since. Here's a snag for anyone investing in SHIB. See this yellow line that's coming across the top? This latest rally, it has been halted. It has been stopped by the 200-day moving average. That's a bearish or a weak signal. If it can break above this 200-day moving average, that would be a bullish or a positive or a strength signal, right? And right now, that's sitting at 64.96 is where the 200-day moving average is. So if it can break above 64.96, call it 6,500. If it can get above that and it can stay above that, then I think it's looking healthy for continued gains. Otherwise, it might just consolidate at this area right here. So that's where it's at. It had a nice run today. It's up nearly 30% just today. So it's been moving good today. But that is something to be cautious about. This could be a peak for SHIB right now until it can build some momentum to break above it. And if you look at the RSI, the relative strength on it, it is getting pretty maxed out. It's at 75 right now. Now on crypto, coins can run above and run hot on the RSI, the relative strength index. So 75 isn't that high of a number. It's been above that 1, 2, 3, 4 different times in the past month. So it is getting to a point of resistance right now. So that's what I think about SHIB. But again, I know I'm repeating myself a little bit here. If it can break above this 200-day moving average, and this is a simple 200-day moving average, then you've got a bullish signal. If it can go up, break above that 200-day moving average, and then come back down and bounce off of it, that is a buy signal right there. Let's see here. What else? Anything else you guys want to talk about? Well, I got the chart up here. If not, I'll just carry on, and you can we can stop and talk about anything at any point. Let me just put Ethereum in right quick, since we've been talking about these other cryptocurrencies. ETHUSD is the ticker symbol you would use, and I'm going to use Coinbase's data. Let it load and let my trend lines load. Just a little slow. It'll get there. Okay. All right. This is the 1 hour chart for Ethereum. Right now, today, the 50-day moving average has been acting as resistance for Ethereum. And it made that switch right here, November 4th, at about 9 a.m. Eastern time. And it's been using that as resistance. So it looks like Ethereum might be coming down a little bit, and it might use its 200-day moving average as support. And that 200-day moving average right now is at 4407. So it's about $60 away from that. That would be the support level that I would hope for it to hold above for Ethereum. Okay, well, that's Ethereum. It's still looking very healthy. It's above its trend line that it had. Took a week for it to break above that trend line for Ethereum. But once it did, I mean, there's nothing to hold it back anymore. Let's see here. What are your thoughts on Disney? Okay. I actually like Disney as a company. Let me pull them up on the chart. Things back up. All right. If you could, in the chat, if you can hear me and you can see me, just say hi or good or thumbs up or something. I don't know what just happened there. All right, all good now? Okay, sorry about that. Just kind of froze up and crashed there. Okay, Disney. All right, thank you. Okay, Disney. Let's get to Disney. All right, ticker symbol was DIS. Like I was saying before, the feed dropped for some reason. Yeah, I don't know why. The live streaming system that I use, it went to a blank screen and I had to reload it. It's never happened before. Okay, Disney, DIS. I do hold Disney in my portfolio. I like Disney. I think Disney Plus is great for the company. And for me personally, when it comes to Disney, Disney has, I believe, nowhere but up to go. Let me switch this to a 1-day chart to get a better view here. If we look at Disney, back here on March the 9th, it hit an all-time high of $203.02. And since then, it had pulled back, and it's just been a swing trader's dream all summer long. September, it kind of dipped down, but it's been rallying here recently. Earnings are 5 days away, and earnings are expected to look like this: an EPS of 52 cents per share on revenue of $18.8 billion. Now, the reason I said I believe Disney has nowhere but up to go is that if you look at where the company is right now and where the company was, say, the end of 2019, and let's do that on the chart. Let's go back and look at where Disney was at the end of 2019. So we've got October there. Here's November, December. All right, let me mark this so it's easier for everyone to see. Right here is where Disney was at the end of 2019 and the beginning of 2020. Okay. And if we measure from here to where Disney is at right now, it's a 19, let's just call it a 20% difference. Okay. 20%. It's valued at $319 billion. Okay. All right. So if I do this, if we take 20% off right now, that would bring Disney to 148. So is that about okay. Since Disney has a $300 billion market cap, let's say there's, instead of 20%, let's call this 30%. So we've added a third to Disney's valuation, $100 billion, just to round these numbers off to make them a little easier. With the addition of Disney Plus, is Disney Plus worth $100 billion? I would say yeah. If we look at what Netflix is doing, right? Let's pull up Netflix for just a quick moment. Netflix is valued at $286 billion. Okay. Now, I know Netflix is bigger than Disney and has bigger, more subscribers than Disney Plus does. But if we just take and cut Netflix in half, that's 240 billion. I'm sorry, $140 billion. But we've added $100 billion for Disney Plus. I think that's where we're getting our price at for Disney. Because back here on Disney, 2019, that's when all the parks were open. That's when it was having blockbuster after blockbuster with its Marvel movies. It was running on all cylinders, right? The pandemic shut that all down. Disney Plus had launched. The stock has shot up. But where we're at right now, if we go another 10% higher, that means we're valuing Disney Plus at about $100 billion. And I think with Disney Plus, with the, oh my goodness, all the Marvel movies they have lined up, whew, I'm excited to see all of them. But that's a lot of money. And then their parks aren't even full capacity yet. That's why I think Disney has nothing but sky to move right now, because they are not running on all 8 cylinders or 12 cylinders or however many. I guess it's batteries now. We need to start using a battery phrase and not a cylinder with a combustion engine. Anyways, that's kind of my thought process with Disney. And I think it's got a lot more that it can go before it's fully valued, because it's just not running at full capacity yet. And they've added that whole Disney Plus on top of it. Plus, they've added all these new movies, these new Marvel movies, and each one is going to be a blockbuster, at least for a few years. Anyways, so that's my thought on Disney. I think it's a great investment. Disney's a buy and hold. I don't think there's much trading to do around Disney. Usually Disney's price doesn't move that fast. And if we look here on the daily chart, yeah, you could have swung, you could swing trade this on its ups and downs, but it moves so slow, you can make money a little faster swing trading other setups. So, all right. Clever. Yep. Thank you. Thank you for sharing your thoughts. I'm planning on keeping my 32 shares of Disney at $205 at least. Yeah. Yeah, absolutely. So, yeah, that's what I'm thinking on Disney. I'm buying and I'm holding for a while on them. Okay. Any other companies that you want to look at? We can definitely do that. On Lucid, yeah, we talked about Lucid. The other electric vehicle company that's got some bad news is Workhorse, and it sold off a bunch today. Ticker symbol WKHS. I used to be, did I not type that in right? WKHS. There we go. I used to be a fan of Workhorse. I used to like the company. I still like the company. Oh, yeah, no problem. That's good for me. Thank you. Have a good weekend. It's almost midnight here. Well, thank you for joining me. Thank you for staying up late and joining me. I appreciate that. Workhorse down 9.2% today. The company is just hitting rock bottom. I'm not sure if this floor is going to hold at the $6 mark. Wall Street Journal came out today with documents that said, well, here's the title: Electric van maker Workhorse is being investigated by the Justice Department. Documents show inquiry adds to the SEC probe and comes after the company changed management, suffered production setbacks. So that's a big hit to Workhorse and anybody who was hoping that earnings would maybe turn things around for Workhorse. But this Wall Street Journal report that the Justice Department is joining the SEC in an open investigation into the company, I just don't think it's a good sign for them. And I believe the focus of the inquiry was not revealed in the documents in this report. But there are concerns around allegations of fraud at Workhorse, and I think it has more to do with the previous management team, not the new CEO. And in September, there was the infamous Fuzzy Panda who came out with a short report on Workhorse. So I think it's a company to stay away from, at least for the time being, until things can get ironed out and worked out. I'll listen to their earnings call that's coming up in 4 days, but I don't expect to hear anything major coming from their earnings call, but I'll listen to it to see what happens. But that's what I wanted to mention about Workhorse. I know a lot of people started following me around the whole Workhorse videos that I was putting out. But yeah, I think it's time to just stay away and have a wait and see approach to Workhorse. I mean, 9.2% loss today. You don't want to be the person holding the bag when the stock suddenly just drops another 10% or so. All right, another company to look at, Matterport, for just a second. Ticker symbol MTTR. I know we've been talking a lot about this company. I actually have a video coming out tonight at 6:45, 7 o'clock that talks specifically about Matterport and their link to the metaverse and how this company is a buy and hold. And I'm talking 5 years, 10 years, buy and hold type of company. It was up 8.4% today. It bounced right off of its 50-day moving average. That's where the wick came down, and the candle rested right on that 21-day moving average, and it popped again today. I expect that it may pull back again. I think these wild swings that it's having, I mean, this was an 18% day up, another 10% day up. It fell 3%, it fell 1%, it fell 13%, and then it was up again 8%. So these wild swings are just momentum traders getting in and out of it. Wait for it to cool down, come back down to its 50-day moving average, and that's when I would be starting to buy again and load up on Matterport. I think it's a company that is going to be hugely beneficial for the metaverse because they are taking literally digital twins. They're taking pictures of physical buildings and turning them into 3D scapes in a digital sense, where in the metaverse, you could literally walk around anywhere in the world that has had a digital twin or a digital copy made of it. And those digital copies, you know, linking them to the blockchain or NFTs, those physical buildings that become digitalized, they could literally be a licensing fee. Say somebody wants to put, I don't know, Mona Lisa in a museum with a bunch of other artwork so everybody can see it and everybody can be a part of it. You know, somebody could pay millions of dollars in licensing fees to the owner of that. Just a quick example. And then you pay a ticket to go to the metaverse and go look at it. I don't know. But Matterport is going to have a big hand in making that all come to fruition. And I like the company. I think the management team is solid. But don't buy when it's up 8.4%. Don't buy when it's up 13%. That's just getting in at the top, and you won't feel so good when it comes back down 13% in a day. So use technical analysis, wait for it to come down to a 50-day moving average, and that's when you can assess to see if it's time to make your entry and pick up shares. But yeah, I just want to talk about Matterport a little bit because it did bounce off of that. Okay, a couple of deep dives, or at least deeper dives on companies that I want to talk about. Just like Planet Fitness yesterday, I feel very strongly about that company going forward. I've kind of fallen in love with that company. Another one that's doing real good is LYV Nation, ticker symbol LYV. LYV Nation. Awesome take on Matterport. Thanks. You are welcome. Absolutely. All right. LYV Nation, ticker symbol LYV. It has been coming to life recently, and it is up today after reporting in upside earnings last night. It was up 15.14% today. Oh man, these earnings, you want good earnings? These are perfect earnings. As the largest live entertainment company, live entertainment. Remember, a year ago, we weren't allowed to go to live entertainment in many places in the world. So that's what this company does. Imagine how it affected them last year, just like Planet Fitness that I talked about yesterday. Well, in Live Nation, they are the largest producer of live music concerts in the world and the owner of ticketing giant Ticketmaster. Live Nation, unsurprisingly, had an awful year in 2020 as the pandemic led to the cancellation of tours and the closure of venues. However, 2021 has served as a rebound year, especially during the summer, which translated into a fantastic Q3 report. Live Nation surprised everyone with an EPS, or earnings per share, of 19 cents. Revenue skyrocketed to $2.7 billion versus the wowsy $184 million that it had at this time last year in revenue, and was well above analyst expectations in this report. Live Nation did not provide guidance, but did say that leading indicators point to a record 2022. Its confirmed show count across amphitheaters, arenas, and stadiums is up double digits relative to 2019. Not just 2020, but they're up double digits from where they were in 2019. This sounds incredibly good for Q4. That will be later on in January, right? So relative to 2019, it's looking really good. And 2019 was a pretty good year. Live Nation has already sold 22 million tickets for shows in 2022. Next year, demand has been stronger than ever. The bottom line, Live Nation has been one of the biggest beneficiaries of people going back to a somewhat normal life. In today's Pfizer news, well, it only helps the situation. So I think Live Nation is one to keep on your radar. Obviously, don't buy after it has shot up 15%. You wait for pullbacks, but it's definitely one to keep your eye on for Q4 and for next summer, since they've already sold so many tickets for next year, millions of tickets. All right, another one to look at, and you're kind of going to see a theme with stocks that I was kind of talking about earlier. Live Nation, now AirBnB. People are going out again, and these companies are reflecting that. AirBnB, ticker symbol ABNB. Again, this is a daily chart. It looks just like Live Nation. They were up 12.98% today, flatten after hours. Nice move up because of earnings. So Airbnb shares are traveling higher after the alternative accommodation company reported a brisk return to pre-pandemic sales and posted its widest earnings beat since going public December of 2020. Airbnb's impressive Q3 results may not have come as too big a surprise after Booking Holdings, when we talked about them at the beginning of the show, yesterday signaled, though, its Q3 results that global travel is making a roaring comeback. The travel company easily beat estimates. Travel giant Expedia, that we talked about earlier in the show, also reported excellent Q3 results yesterday, further indicating that travel is back, baby. What may be more of a surprise are certain trends that are cropping up for the first time, primarily fueled by the pandemic. For example, remote and flexible working has created further demand in alternative accommodation bookings, as many workers are now able to work whenever and wherever. This is evident by Airbnb noting that Mondays and Tuesdays have become the highest growing days of the week to travel. Very interesting. Also, long-term stays, like 28 days or longer, continue to be Airbnb's fastest growing category by trip length in Q3. Overall, global travel is rapidly rising due to pent-up demand after a summer mirrored with COVID restrictions. Although it may not have been a huge surprise that travel has demand, but it was in full force in Q3. I think certain trends will allow Airbnb to carry the momentum it has seen in the past 2 quarters forward over the long term. For example, camping has exploded since the pandemic as a way to still travel in spite of many COVID restrictions. However, although COVID restrictions have greatly eased around the world and in many places, I know it's not perfect in all places, camping is still a hot source, as evidenced by companies like Thor Industries, ticker symbol THO. We've talked about them before because of their great quarter they just had. They manufacture and sell RVs to companies like Camping World, who also just came off of a great quarter because they're the ones who are the retail sellers of RVs. But Thor Industries continuing to achieve record backlogs. I think this is partly attributed to remote working. Given that these trends are in their infancy, I think Airbnb has a bright future, and it's still stirring up quite a bit of enthusiasm with investors. All right, that's what I think about Airbnb, the RV industry with Thor Industries. Also, excuse me, the boating industry is another one. Even though boating season for the northern part of our country is coming to an end and boats are getting winterized and put away for storage for the winter, when the spring comes around again, it's going to be an industry that is hot as well. So a couple of trends that I saw, I wanted to point out to you guys. You can play them how you would like, but these are some ideas for you. So these are the companies that I wanted to talk about today. If you have any companies, let me know. I'm happy to go over them with you. I'll check out the winners and losers for today, and then I'll wrap the live stream up unless you have any questions. Now, remember, Sunday, the Catalyst Watch video will come out. It has what I'm watching, why I'm watching, and what I'm watching for are all in that Catalyst Watch video. I think it's the most important video that I do on a weekly basis, because it can give you a lot of ideas for what you can look for in the coming week. So watch for that on Sunday. I think it's a good video. It's got good feedback so far. So yeah. All right. Sheeb is up to 62.02. Looks like right this moment. It's up 25%